Welcome to the Deep Dive. We plunge into complex topics and pull out the key insights you need. Today, we're tackling something pretty tempting, especially if you're looking at overseas property, these rental guaranteed returns in Thailand's real estate market.
Ah, yes, they sound fantastic, don't they? Like free money almost. Passive income dreams.
Exactly. But the truth, it seems it often hinges on something easily missed, a distinction that, well, could save you a lot of trouble.
It really could. That promise, of immediate assured income, it's powerful. But the reality behind it, it's usually a lot more complicated. Needs a closer look. So our mission today is really to help you figure out what's a genuine, solid opportunity versus something that might not pan out, and crucially, how the right agent makes all the difference.
Okay, so where are we getting our bearings? What's our source?
We're looking at a really insightful article. It's called Unmasking Thailand's Rental Guarantees, Agent or Imposter? And it comes from Ocean Worldwide. They're a luxury real estate agency, and they've been based in Phuket for a long time, since 2004, actually.
Phuket, right. Got it. P-O-O-K-E-T, not Phuket. So nearly 20 years on the ground there.
Exactly. And they specialize in high-end residential property in Phuket and also Koh Samui. The director, Sandra O'Neill, she's apparently helped literally thousands of families and investors navigate that market. So, they really bring practical, hands-on experience.
Right. That context is important. So let's start with the basics then. For anyone maybe new to this idea, what exactly is a rental guaranteed return? What's the big promise?
Okay, so in simple terms, it's where a developer or sometimes a management company offers you a fixed return on the property you buy from them, like say 5% or maybe up to 7% per year, usually for a set number of years.
And the appeal is, well, it's obvious. Right?
Totally. Guaranteed income. You don't have to worry about finding tenants, managing the place yourself. It sounds like pure passive income. Just sit back and collect.
That's the dream scenario.
Yeah.
But the article flags this immediately, doesn't it? That this simple promise hides complexities.
It does. It's rarely just about that headline percentage. That's the hook.
So if it's not just the 5 or 7%, what are the first sort of warning signs or deeper questions we need to ask?
Well, the classic one is that guarantee figure net or gross? Big difference. Because gross sounds good, but then you find out you still have to pay maintenance fees, common area charges, maybe contributions to a sinking fund for future repairs.
Right, and those costs can eat up a chunk of that return.
Exactly. Suddenly 7% gross might look more like 4% net, or even less. And then the other huge question is, who is actually backing this guarantee?
What do you mean? Isn't it the developer?
Often, yes, but is it just a line in the contract based on their general business? Or is there something more concrete? Like, is there a specific chunk of money set aside in escrow? Is there perhaps even a bank guarantee involved? These details tell you how secure that promise really is.
Okay, those are much more specific probing questions. And that feels like a good transition to this core idea in the article. The difference between a professional real estate agent and, what do they call it, a would-be agent.
Yes, a would-be agent. And this distinction is absolutely critical when you're looking at these guarantee deals, especially with those complexities we just mentioned.
Why so critical? What does the professional bring that the other type doesn't?
Well, think about it. A true professional, like the article implies Ocean Worldwide aims to be, isn't just processing a sale. They're evaluating an investment product for you. They use their deep knowledge not just of property values, but of the developers themselves, their track records, the quality of their construction partners, the legal stuff behind the guarantees.
They're filtering opportunities.
Precisely. They carefully select projects they believe offer genuine, sustainable value. They're not just trying to make a quick commission on anything with a guarantee sticker slapped on it.
Okay, so what about the would-be agent then? If they lack that depth, how might you, as an investor, spot that? Are there signs?
I think one sign is enthusiasm that isn't backed by specifics. They might push every deal with a guarantee as amazing a can't-lose situation.
Without much nuance.
Right. They might focus heavily on the glossy brochures, the lifestyle, that headline percentage. But if you start asking those tough questions we talked about.
Like the developer's financial health? Or past project performance?
Exactly. Or ask to see the specific clause in the contract about force majeure, or what happens if occupancy rates dip. A would-be agent might get vague or brush it off. A professional should welcome those questions, or at least know how to get you the answers.
Let's delve into that professional perspective more deeply then. Referencing Ocean Worldwide's approach, maybe implicitly.
Yeah.
How do they operate? What does that vetting process actually look like?
It sounds like a serious amount of homework, frankly, due diligence. Their job, as the article suggests, goes way beyond just showing properties. They dig into the developer's financial stability. What's their track record? Do they finish projects on time? To budget, what's the construction quality really like? Will the building still look good and function well in 5, 10 years?
Because that impacts the long-term rental potential, even beyond the guarantee period.
Absolutely. And they scrutinize the guarantee offer itself. Is it realistic? Is it based on actual market demand and achievable rental rates for that specific location and property type? Or is it just an inflated number to attract buyers?
So to try to separate the solid business models from just marketing hype.
That's the core of it, differentiating sustainable returns from promises that might be hard or impossible for the developer to keep long term.
And that experience, those years in the Thai market, that's not just a nice bio point. It gives them real insight.
It has to. They've seen developers come and go. They know who consistently delivers and who maybe you need to be more cautious with. It acts like a protective filter for their clients.
Safeguard. I like that term.
Yes, exactly. Because, not all these guarantee schemes are the same. Some are well-structured, based on solid projections. Others might be overly ambitious or, worse, masking underlying issues. A professional agent analyzes market trends, rental demand forecasts for that specific area, and looks at the developer's actual capability to manage these properties effectively. It's about the fine print, the operational plan, not just the sales pitch.
Okay, so that's the professional, thorough approach. Now, let's contrast that again with the would-be agent. What's their typical method, and what are the risks for the investor?
Well, lacking that deep market knowledge or maybe the inclination for heavy research, they often take what the article terms a scattergun approach.
Meaning?
Meaning they might just present everything available with a guarantee without really filtering if it's a good fit for your specific financial situation, your goals, or how much risk you're comfortable with.
A one-size-fits-all pitch.
Pretty much, which of course rarely fits anyone perfectly. It's like that old saying, if all you have is a hammer, everything looks as a nail. They just see guarantee and push it.
And I guess the pressure or the desire to make a sale could easily overshadow the need for that deep dive, that due diligence we talked about.
And that's a major risk highlighted in the article. The focus can shift to just closing the deal rather than meticulously checking the guarantee's feasibility or the developer's real reputation and financial standing.
They might not even know the right questions to ask the developer.
Or they might not want to ask questions that could potentially derail the sale. Either way, the investor might end up exposed to risks or hidden costs they weren't prepared for.
Okay, so pulling this all together then.
Yeah.
For you, the listener, maybe thinking about these Thai rental guarantees.
Yeah.
What's the bottom line?
The bottom line is, yes, these schemes can be attractive, potentially great investments, but understanding what's really underneath that promise is absolutely crucial. The role of a truly professional agent isn't just to facilitate a purchase. It's to provide guidance, objective advice, helping you make a decision that genuinely lines up with your investment strategy and risk tolerance. It's guidance versus just a sales pitch.
So navigating Thailand's property market, especially with these guarantees,
Yeah.
it really seems that having that expert knowledge, that careful vetting process on your side, isn't just nice to have, it sounds essential for success.
It's the difference between gambling and investing, perhaps. Leveraging that experience ensures you're aiming for genuine sustainable value, not just chasing a high percentage number that might not materialize. It helps you actually achieve that passive income goal safely.
Right. So there we have it. Rental guaranteed returns in Thailand? Potentially excellent, yes. But success really depends on doing your homework and, critically, getting advice from someone who truly understands the market dynamics, the developers, and the guarantees themselves. That difference between the professional advisor and the would-be agent focused on the sale, it seems it really can be the deciding factor.
It really can. It makes you think, doesn't it? Beyond just real estate. When you face any big decision, financial, maybe career, even personal stuff, how do you make sure you're getting advice from a real expert, someone looking out for your interests, and not just someone trying to make a quick sale or give you the easy answer?
That's a great question to ponder. What signals are you looking for? What questions should you be asking? Something to think about.